Hello and welcome to Livewire's Buy, Hold, Sell. I'm Hans Lee, and today we're going to be unpacking how the professionals identify great growth investments. Are there any reasonably priced companies left, given equity markets continue to hover around all-time highs? Let's find out with David Wilson of Sentier and Joe McCarthy of Elston. Welcome to you both. Thank you for joining me.
Thanks, Hans.
All right, we've got a lot to cover. So David, I'm going to start with you. What is your process for identifying great growth stocks?
Yes, Hans. Our approach is very much at First Sentier is actually at looking at things like return on capital and return on equity. We also spend a fair bit of time understanding the business model, looking at the competitive and regulatory environments as well, so getting a sort of both qualitative and quantitative feel for the company's prospects. And Australia has actually been pretty good at generating growth companies over the years.
Yeah, no, excellent. Joe, same question for you. What's your process?
Yeah, so at Elston, we're a style neutral manager, so we look at both value and growth stocks. In terms of our process, it really starts off with getting to know the business. So we want to find out about the industry, the competitors, business model, the management and strategy. And from there, that all feeds into the valuation. So what the growth profile looks like, what the investment that's required into the business to get it where it needs to go, their ability to extract profits, and the risk. And from there, hopefully you end up with a growth company where the prospects are undervalued, and off you go.
Joe, I'll stay with you. In that process, how much does the macro matter when it comes to identifying those stocks?
Yeah, look, it's an interesting question. So it does matter, but it's a question of whether it's a portfolio construction issue or whether it's a really important driver of the business or an enabler. And if it's the latter, that's when it needs to be really carefully considered.
Yep, okay. How about you, David? Do interest rates, GDP, inflation, those kinds of things impact how you hunt for opportunities?
The way we like to approach this is we're sort of macro aware. I think it's really the sort of bottom-up drivers that really determine the company's growth profile. But you have to be aware of the sort of regulatory risks, economic risks, even interest rate risks, FX risks, commodity price risks as well. So there's a lot of other things you factor in, but you actually, during 2024, really what you saw is actually the key driver wasn't what was happening in China or even what was happening in America. It was actually really the companies themselves really determined the earnings performance.
Yeah, absolutely. So David, staying with you, let's talk about something that likely has a lot more impact than the macro, and that's management. How important is management? And when you get to talk to management at the various companies that you hold and you're eyeing, how important is it to talk to them when it comes to your decision making?
Now, management matters a lot. Really, you want them sort of focused on returns and you want them understanding the sort of risks. And it's also what's quite important, and it's perhaps underappreciated, is the interplay between the chairman, the CEO and the CFO. So have they got the necessary skills, but also they have the checks and balances when they're actually looking at particular opportunities?
Okay, Joe, I'll ask you a similar question, but maybe with a slight twist. Is it the track record or the personality or a combination of the two that's most important for you?
Yeah, look, the track record's important, but the personality's priceless. So, at the end of the day, when you're, leading a company, you're leading your employees, you're dealing with your customers, regulators, all your stakeholders, but they're people, not machines. And it's really important to be able to, balance, often conflicting trade-offs between those stakeholder groups and engage with them appropriately to, really bring everyone along for the journey.
Joe, let's talk metrics. What are maybe two key metrics that a growth stock must possess for you to make it into your portfolio?
It's probably a bit of a different one, but looking at free cash flow to EBIT, because it tells you a lot about what's going on in the business and also what they're up to in terms of the investment side, or maybe what they're not telling you. And the second one is sales and marketing to revenue. So when you start to see that drop off, it gives you a good indication that maybe the sales growth is also about to drop off.
Okay. David, how about you? Are there other key metrics you like to see in your respective growth names?
We like to look at EPS growth. I know it's a simple measure, but it's an important one, but also the trend as well as the level of return on capital or return on equity. So you want to see that improving over time. Otherwise, if you're actually seeing that decline, it's actually telling you that the sort of growth isn't really sort of slowing up. And the other final one is actually, again, a simple one, is just revenue growth. Are you able to sell more product to your customers?
David, I'll stay with you. We never have an investing discussion without talking about risks. What are a couple of red flags you look out for?
First bit of trivia for the day is actually the collective noun for red flags is actually a bunting of red flags. It's not a herd or a flock, it's a bunting of red flags. And there's a lot of companies in Australia that do have a bunting of red flags. The sort of things that we look at, accounting, just in terms of sort of like below the line accounting, issues like that. We also look at balance sheet. Obviously, that's another important risk. Succession planning is another important one. And probably the final one is just the disclosure and the metrics used when companies make an acquisition. That's a real insight into the thinking of a particular company.
All right, accounting and succession planning among them. How about you, Joe? What are some of those red flags that would see you running for the hills?
Probably the first one, and it's pretty similar to what David said, but just the transparency side of things. So when that starts to get worse, it makes you ask, what are they not telling us? And then secondly, it's probably more about, what's driving it. So if it's, industry or macro hype that's really driving that business, it's generally, it's not persistent and it can turn very quickly and it can cause problems.
Okay, well, let's put all this theory into practice. We've asked our guests to bring along one of their top growth stocks for 2025. Joe, let's start with you. What have you got for us?
So I've got Sonic Healthcare.
Right.
It's a pretty simple thesis where you've got great management leading that business, good organic and inorganic growth prospects, and also just a really strong balance sheet. In the last couple of years, they've had a bit of a tough time with the COVID testing revenues rolling off very quickly, and you've had revenue going down faster than costs and earnings going the wrong way. But, we look forward and we can see this at the most recent update where you've got the organic growth coming through, they've got the costs under control, and we can actually see the margins expanding. So we're looking forward to the upcoming year for them.
Right, Joe, so yours there, Sonic Healthcare. David, how about you? What's your growth stock for the year ahead?
For us, Hans, it's ResMed. We think that EPS and revenues will grow at 8 to 12%. They continue to take market share because of the problems at their major competitor, Philips. To give you some sort of perspective, 5 years ago, their market share was 55%. That's actually grown to 75% over the course of that time. They continue to generate a lot of cash. Management's sort of well installed, so it's a stock that we think can continue to grow at those sort of rates.
We agree on ResMed actually. We actually think it might be at a bit of an inflection point where it's such an underpenetrated market, but with the Apple Watch, also GLP-1s being a great catalyst for people to come in to see a sleep therapist, we think it actually might be the next leg of growth for them.
There you go. How do you go about that? You got a double thumbs up for ResMed. All right, well, these gentlemen will be back next time for more Buy, Hold, Sell. That's on Friday. We hope you enjoyed the episode today. If you have, you can leave us a like and subscribe to our YouTube channel as well as the Livewire Markets website where there's great content to be found all the time. Till we see you Friday, take care and thanks for watching.